Hello, valued investors. My name is Nathan Commons from Investors Unlimited. Now that the original planned lifetime of the fund has concluded, this presentation will describe the fund's performance and where to go from here. We will start by just giving you a recap of who we are at Investors Unlimited, and then we will move on to a brief recap of your investment, Nexus-11. Following that, we will discuss the state of the economy, as this investment has not only survived through one of the economically worst periods in history, but it has thrived. Then we will discuss the where we made money and where we lost money in our cost analysis. Moving on, we will talk about the risk involved in this venture and how we attempted to mitigate this further through rebalancing. Furthermore, we will mention just how well the collated portfolio performed through a ratio analysis. And to conclude today's presentation, we will go over what makes the investors happy, their returns. Now we will go on to tell you exactly what Nexus-11 was about. Nexus-11 was a unique portfolio comprised of 11 stocks, hence the name, trading on the New York Stock Exchange, all derived from the 11 global industry classification standards sectors. That's the GICS sectors. Nexus 11 was made to run for 6 years from January 2017 to December 2022. Our goal was to maintain a 15% annualized return to ensure the best result possible for our investors. I'm glad to say that we not only achieved this, but we did better. But I will touch on that a bit later. We approached this portfolio by making optimized weightings and rebalancing the portfolio biannually to ensure we minimized any losses that we could incur. This only lasted the first 3 years. As we were entering 2020, we decided to shift to a quarterly rebalancing system. This did increase our transaction costs, but due to the volatility of the market, we expected that we believed that this was the right call. And to this day, this was probably the best decision we made in regards to this fund. Additionally, our fees for this venture was that our management fees would be 1.5% of all profits. Now, of course, we can't go into talk about exactly what Nexus 11 made or anything like that without talking about the economy as itself. And of course, we can't talk about the economy without that one key thing that happened in these past 6 years. That is COVID. I don't think anyone in this world doesn't know what COVID is. It's the disease that halted the whole globe. In America, it caused an astronomical 34% contraction in the market. This wasn't there wasn't a contraction for that long, as immediately governmental interference was implemented to attempt to return these levels back to pre-pandemic norms, and this was completed in July of 2020. But as of 2020, the U.S. economy didn't just rebound quickly from COVID. We actually used it as a springboard, and we ended up growing 18.4% annually that year. Another situation that hindered the economy was the likes of the presidents Donald Trump and Joe Biden. Both had interesting presidencies, with Trump taking office shortly after the fund began in 2017, and Biden at the beginning of 2021 picking up in the end of COVID. In 2018, Trump engaged in a strenuous trade war with China, in which many experts have declared that the US is deemed the loser. However, This wasn't anywhere near as bad as what happened during Biden's reign, where to combat COVID and the contraction of the economy, he in, inputted additional governmental expenditure through the form of stimulus packages to try to stimulate people spending in the economy to continue economic performance. Um, Additionally to this, he put all interest rates on a temporary hold. The combination of putting interest rates on hold and increasing governmental expenditure through the stimulus packages led to an increased inflationary pressure, which drove the consumer price index up by an additional 8% in that of 2022. Moving away from America at the moment, we have two issues rising from Europe. That is the Russia Ukrainian war and Brexit. It has almost been 3 years since Brexit, as of today, there's been no significant effect on the economy, and the US is still maintaining trading relationships with the UK and the EU indifferently. However, the Russian-Ukrainian war has had an effect on the US economy in both a positive and negative way. Um, and it actually has impacted one of our Nexus-11 stocks positively as well. So that is an interesting facet to look at. As seen here, there has been an incredible increase in investments into electric vehicles. A company that saw fantastic returns was Tesla. Unfortunately, in 2016, when we were picking our stocks for Nexus 11, we deemed Tesla as a not appropriate company to invest in at that point in time. We are sorely mistaken now, but still, um, the the company that we invested in instead did have a increase in profits due to the installation of electric vehicles, but it is nothing like the 3,000% increase from stock price at the beginning of January 2017 as Tesla had. But yes, here we see the US GDP over time. There is an obvious upwards trend identified here with a 30.61% growth over the 6 years. And as mentioned before, with the Joe Biden and stimulus packaging, the CPI has also been consistently growing. And due to Biden's stimuluses, a sharp upward peak in 2022 can be seen, indicating the increased inflation. With a 19.42% growth from 2017 to 2020, it just indicates how important trying to maintain those levels of economic activity through economic recessions, such as things brought upon in COVID. Now we will talk about how much Nexus 11 is actually worth. At maturity, the $100 million investment was worth $356.29 million. That is a 256.29% growth, or a 23.59% annualized growth, exceeding our desired 15% annualized growth by 8.59%. As seen by the graph, the portfolio as a whole has maintained a positive upward trajectory, with slight detours in 2018, 2020, and 2022. These were due to the former mentioned trade war in 2018, the COVID 19 pandemic stemming in 2020, and the increased inflationary pressures from Joe Biden's stimulus packages in 2022. But a breakdown of Nexus 11's success. Phillips 66 was responsible for 16.91% of the portfolio's growth, Netflix 14.93%, Boeing 11.67%, Amazon 11.52%, Lionel Bassel 11.39%, Apple 9.48%, Walmart 6.58%, Avalon Bay 5.48%, Southern Co. 5%, Gilead Sciences 3.67%, and Citigroup Incorporated 3.37%. Now, if we look at the table on the right, we've just done a quick comparison between the stocks selected in the Nexus-11 portfolio and their GICS sector indexes that are associated with the S&P 500. In the first bay, you see Phillips 66 grew 21.16% compared to the GICS sector index, where it grew 18.96%. Moving along, we saw Netflix grow 129.03% over the 6 years, compared to its sector, which actually contracted 11.42%, causing a disparity of 140.45% in change. Furthermore, an interesting stock was that of Boeing, where they did not perform anywhere near the GICS sector index, but they were a high performer in the portfolio. The Boeing grew 21.57% over the 6 years, whereas the GICS sector index grew 54.11%. Furthermore, Amazon actually grew 121.69% compared to its sector of 54.7% growth. Lionel Basel grew, they didn't actually grow, they contracted 3.33%, whereas the sector grew 56.9%. That's an unfortunate loss, but the fact that it is fifth can be attributed to something which I will go into in just a moment. The next stock was Apple. Apple, as an information technology stock, is going to perform well. And as I said, they had a 347.11% return compared to the GICS sector index of 166.82%. Furthermore, Walmart had a 109.67% return compared to its index of 71.58%. Then, Avalon Bay had a contraction of 1.02% compared to the GICS sector of 22.9%. Then, Southern Company had a unfortunate 4.58% growth compared to the sector of 47.08%. Then Gilead Sciences had a 12.22% growth compared to the healthcare sector of a 96.86% growth. That disparity, how unfortunate as it may be, isn't the end of the world, as there is still a profit to be made. Lastly, Citigroup Incorporated had a contraction of 24.91% over the 6 years, whereas the sector grew 46.4% over the 6 years. We have our best performers here, Phillips 66, Netflix, and Boeing Company, and we have our unfortunate poorest stock at Citigroup Incorporated with 3.37% of portfolio growth. A worthy stock to consider for a best performer is that Lionel Basel, because as of December 2019, Lionel Basel had only contributed 3.96% to the portfolio's growth. But upon the adoption of electric vehicles, Lionel Basel, who manufactured batteries for cars, decided to uptake their manufacturing and gained traction in this industry, and took this to try to better their valuation of their stock, and made significant contributions towards Nexus-11's profits. Now, doing a comparison of these four stocks, we see that the top three stocks are here, and so is the bottom stock. Unfortunately, Philips, Citigroup, and Boeing stocks prices fell below what they were in 2017. But thankfully, in the case of Philips and Boeing, both stocks seem to share the same trait of seasonality, and therefore, the quarterly rebalancing strategy allowed Investors Unlimited to capitalize on profits by purchasing low and selling high. Unfortunately, Citigroup's peaks and troughs were too volatile, and investing a large amount of money was just too great of a risk. And we evaluated this because we do not want to lose the investors' money. We want to try and make you money. So luckily, we had evaluated this as a risk, because if you see the trajectory of the performance, it is straight down, declining. Um, but in the first 3 years, we were able to scrape $10 million off the original climb from 2017 to 2019. Now, looking at Boeing's stock price. In 2020, Boeing took a massive loss due to the travel and COVID restrictions, as Boeing is aerospace corporation, and due to there being extremely tight travel restrictions, aircraft demand was reduced immensely. But in 2021, upon the invasion in the Russia Ukrainian war, there was a 17.5% increase in industrial production of US defense and space sector equipment, in which Boeing participated in, thus regaining their position and stabilizing their stock valuation in such a volatile time. The next section is one on the risk associated with Nexus-11's investments. I'd like to remind you that all Nexus 11 had a 256.29% growth over the 6 years. The three benchmarks that we have used throughout the fund's lifespan were the Nasdaq Composite, the S&P 500, and the Dow Jones Industrial Average. Over the 6 years Nexus 11 ran, the return on S&P 500 and Dow Jones were quite low, whereas Nasdaq had a 207.64% return, rivaling the 256.29% of Nexus 11's. I'd like to also state the standard deviations of all three benchmarks. That was 11.36% for Nasdaq, 6.14% for S&P 500, and 3.75% for Dow Jones. I've stated this to correlate something further along, but as of right now, we see this graph, and alongside the obvious disparity between the Nexus 11 and the other benchmarks, Nasdaq and Nexus 11 actually grow and fall in a somewhat similar motion, thereby indicating a level of correlation to the market. Therefore, for further calculations, I will be planning on using Nexus 11 and Nasdaq as they are similarly competing funds. But in the meantime, Nexus 11 was calculated to have a standard deviation from the norm at 17.25. When comparing it to the previous benchmarks, it is significantly higher. And as portrayed here, we can see that Nexus 11 is much more volatile and therefore innately riskier. Additionally, using the Farmer French 5-factor model, the Jensen's alpha of Nexus 11's was calculated to be 2.14. Therefore, Nexus 11 was outperforming the Nasdaq index by 2.14% annually. Additionally, Nexus was calculated to have a 0.082 beta, thereby not being significant with the market. A beta of 0.05 or less means that the returns of that portfolio are correlated to the market and go up and down in cyclical motion with said market, which Nexus 11 unfortunately is not. It is, however, I said and showed previously, they had a similar structure to Nasdaq, thus it's just coincidental that they look the same. Now we will conduct the ratio analysis. When observing the performance of a portfolio, it's important to recall that Nexus 11 had the highest returns seen when compared to the comparable benchmarks. The first metric in which I use is the Sharpe ratio, as it is a measure of return that represents the amount of return you receive for every unit of risk that you take on. The second ratio is that of the information ratio, which is a measure of portfolio returns beyond the returns of a benchmark. The third is the trainer ratio, similar to the Sharpe ratio, but it uses the beta rather than the standard deviation. This is a measure to incorporate the downside risk involved with the Nexus-11 rather than the systematic risk associated. The last ratio is the Sortino ratio. This ratio measures the risk-adjusted return of an investment asset, portfolio, or strategy. In each case, both Nexus-11 and Nasdaq were found to have good ratios for each Sharpe information trainer and Sortino. However, in all four ratios, Nexus-11 prevailed slightly ahead, outperforming the Nasdaq composite. The last piece of analysis we cover is whether this is statistically appropriate. Thus, by placing the returns into a histogram and then comparing it to a normal distribution, we can see that statistically it is almost appropriate. Nexus-11 had a kurtosis of 4.53. Thus, it is slightly off of that kurtosis of a minimum 3, which is normally distributed. Additionally, it had a negative skew of 0.285, thus it favors a positive return, but has a risk of heavy losses. I hope you understand the processes in which Nexus-11 has gone through to get to you all now. It was a risky yet successful venture, and now you can reap the soils of your investment. With a final portfolio valuation, after deductions of 1.5% in management fees, taxation fees, and transaction costs, the portfolio Nexus-11 value is $292,024,191.35. Now that is to be split amongst the five of you, respectively to your initial investments, as seen in the chart there. I would like to thank you all for joining us on this investment journey, and I hope you found it as profiting as we do ourselves. Thank you once again, dear investors, and if you have any questions, we have our details right here, but otherwise, have a good day.